Hello everyone, good afternoon and welcome to today's Trading the Markets Live with the Live Trade Room. And today now is Wednesday the 18th of July. So I hope you're all keeping well. So just before we begin then, if we can start as we always do, and just to let you know the purpose behind this particular broadcast is to trade the markets live, looking for live opportunities and looking for what's called high probability trading opportunities as well. So we're very selective about the types of trades that we look to we look for when we trade these markets, and the idea is we'll introduce a methodology and approach that hopefully you can identify with and pick up. It's fairly simple and straightforward, where we have a strong focus on what price is doing. So we're not going to overcomplicate things. We're going to literally focus on price action, and therein lies the potential for us to stack the odds in our favor when we trade these financial markets. And all what we need to practice on a daily basis is our ability to be consistent with a strong approach to risk management. So that's what you can expect. So moving on, just take a brief moment to familiarize yourselves with the risks involved in trading these markets. So please do take a brief moment to familiarize yourself with our risk warning. So before we begin, let's take a quick look at some potential market moving news. So what we'll do is we'll get up Forex Factory, and as we scroll through, today is obviously Wednesday the 18th of July. We had a significant event yesterday. We had Jeremy Powell, the Federal Reserve Chairman, testifying yesterday, and he's going to do so again today at 3 p.m. and all these times are London time as well, just for your information. But the general overview or the consensus really from yesterday's when Chair Powell was testifying was that he broadly gave strong support for the strength behind the US economy, and as a result that had a strong impact on the US dollar, and that's really one of the things that we're going to look at for the remainder of the session. Now we do have Powell testifying again, so if you go to Forex Factory you can sort of get a little bit more information about who he's testifying to, but what the market's looking at very carefully is to see overall what is his approach to monetary policy in the US, what state is the economy in, and what are likely to be the decisions with regards to increasing or decreasing interest rates. Now, there's a strong impulse to going on this path to increasing interest rates. That's very much the path of the Fed, and that was pretty much supported yesterday. Now, in addition to that, we have crude oil inventories, which will be an interesting number, and we'll have a look at the crude oil market very, very shortly, actually, and that's at 3:30 p.m. London time. But really, we're looking at the build-up towards 3 p.m. And we will see what the general consensus is, and more importantly, see how price action will react to that news event. Because yesterday we started to see some strengthening come back into the market. So what we experienced was a series of pullbacks, let's say, a little bit of consolidation and shaking out of the market before we actually saw the actual move to the downside. So we were only able to get into one trade yesterday. We took a 10 pip loss on it. But for those of you that were able to join us at the live trade room, we do another live trade room straight away after this, when this broadcast ends, and we were able to benefit from 3 profitable trades. So overall we had a positive day yesterday, although we had to be very patient and be patience is really the word for yesterday, because the moves arrived, just not in the time frame that we were interested in trading them, certainly as far as this session yesterday is concerned. But that is the nature of trading these markets, so there's nowhere to hide. I mean, price action will do what it's always going to do, and if you're still at your trading desk when you do get the move, then you get the benefit from that move at that point. Okay, so let's go straight over to the charts then. We've had a quick review of the news, and the trade plan has been very simple and straightforward since this morning, actually. and if I zoom in a little bit for you on the euro dollar, a break beneath yesterday's low. Yesterday's candlestick turned into a bearish engulfing. As you can see, we're completely engulfing the highs and lows of the previous day before. So really, a sell below the 1649 is actually a little bit of a no-brainer for us. So that was the first opportunity we're able to capitalize on this morning. And we did have a nice strong move down to the 1600 level. In fact, 1601 is today's low. And as you can see, we've experienced a little bit of a pullback. Now, a lot of this pullback is probably in preparation for the Fed chair due to testify once more. We might get to see some continuation. So the first opportunity is to look for the breakout trade below 1649, and the second one is to look for some pullback opportunities. And that's kind of the phase which we are in. We're currently pulling back off the lows, which is really what we'd like to see. Now we do have, I'll change these levels to intraday levels just to avoid confusion. And let's zoom out. So this is a 15-minute time frame. This is one of the markets we're going to look at. So we have had a flush low already and a pretty strong reversal, followed by the sell-off this time yesterday. Really strong sell-off to the downside. So all we're doing is potentially looking for this market to pull back to previous levels of support, which for us, actually looking at this chart, is very much the 1649. What I'm doing is just taking note of the 1632. So actually, we'd prefer this market to pull back even further, believe it or not, before we take this opportunity. But we'll come back to this, and we'll see what is going on at this price point, because there may be an opportunity to get in with a really small risk and a strong risk reward to the downside. But we just want to bear in mind the fundamental event behind this market, which is very much the testimony of the Fed chair. So that's the euro dollar just beginning to strengthen. And we're seeing that across many of the dollar pairs. And we've been discussing with our traders today about the potential for this market to really move lower and to extend beneath these lows here. It was slightly higher than that, the 3070 level. 3067. So we've had the move down during the European Open. So we've had that extension below that level, just off this little floor here. So clearly we are in a place where this market is currently moving sideways. Let's take a note of these, the open and the closes, just in these levels there. So we're currently within this range. So what we want to see is actually, like yesterday, a little bit of a structured reversal, and maybe look for opportunities to sell between the 3076 and the 3067. Somewhere in there might actually give us the better opportunity to get into this market. So we'll come back to the pound dollar. Dollar yen, we have been looking to buy this market above the 112.92, but as you can see, we've stretched above it, and now we are currently below that level. So we do still anticipate this market to continue higher. It's just we might need to be very patient and wait for that opportunity to arrive. Dollar CAD is in a similar boat to the euro and the pound, except we're looking to buy this market, so we're looking to stick with the theme of dollar strength, and the first opportunity was the breakout above the 32.16, and it looks like we're getting a pullback to that level as we speak. So again, we'll keep a strong eye. We'd like it to really bounce back to the 32.16, and this is why, if we identify, because today we've identified a number of dollar related trades because of the dollar strength, now we need to cherry pick and be very careful about the entries and looking to get the technical setup correctly with controlled risk, and also with a really good opportunity for a positive risk reward. So we're quite happy for this market to come back to these levels and trade that price action. So we'll come back to the pound dollar, the dollar CAD, should I say. The dollar Swiss, a little bit of indecision around parity, which is the 1.00 level. So again, we'll continue to watch that, but really that's not a major high probability opportunity for us. The Aussie dollar is the trade is the breakout trade is the 73.75 level to the downside. We've had a nice move in that market already, and we're currently experiencing a pullback. So we'll come back and have a look at this pullback as well. And we're just looking for the next leg to the downside. So we get pullbacks in all of these markets all the time, and it's just looking to capitalize on these opportunities when they arise. The daily chart on the New Zealand dollar, we were looking at opportunities to sell below the 67.55. As you can see, those didn't last too long before we got the reversal actually, and this is a strong reversal candle as things stand. So what we'll do is we'll continue to look at the euro dollar, the pound dollar, the dollar CAD, and the Aussie dollar. There are sort of high probability opportunities. We also have the euro strengthening against the pound, so there's clear weakness in the British pound. And we're looking at the 89.31 level for this market to provide a little bit of resistance in around this level, which is a little bit above these current levels. So from a risk reward perspective, that's not ultimately stacking up for us. Plus, obviously, a lot of the negotiations with the Brexit situation is going to be ongoing, and it's going to continue to be turbulent. So if I just take you back to the euro pound, what we're seeing here is 10 months worth of turbulent sideways moving price action. So those are the market conditions. Can we identify yet a clearly defined directional bias? The answer is no, unfortunately. So that's why we're not choosing to get involved in the euro pound. Euro yen got a bit of a rejection candlestick yesterday and had this little rollover to the downside. So we were trading this on a daily time frame from a breakout of the 29.80 level, the 129.80 level, up to these levels up here, and we're able to take profit on that candlestick yesterday, and that was when we were actually trading the daily time frames. And you can see we've run into this level of resistance. We're anticipating this market to just move a little bit higher, but clearly we've bounced off the 132.100 level, and we're getting a bit of a bounce to the downside as a result. Similar situation in the dollar yen, the pound yen. So we've had a bit of a break to the upside. This is a little bit messier from a price action perspective. So again, because of that lack of clarity, we're going to just back off for a little bit. Now, another market we anticipate lower, the breakout trade was the 12.26. Below yesterday's low, we got a really strong breakout yesterday below the 12.36, and we're seeing continuation today, although we are experiencing a significant pullback as things stand. So we'll also look at the gold market, and another market we're going to look at as well is the potential for the US oil market to extend below the 67.04 level. So we'll have a look at this. So as you can see, we've got quite a few markets to focus on, and we want this market to extend down to this level and confirm a breakout below the 67.04, and we'd be very happy to sell that market. Obviously going in line, just to clarify, we're going in line with the prevailing trends and looking to capitalize on the next move to the downside. And we want to stack the odds in our favor when we make these decisions, and not be frivolous, to actually be nice and patient and get in when we get the reasons to do so, and they reveal themselves to us. So so just looking at the US equities, and we can also look at the FTSE as well. We're just getting a bit of consolidation at these highs as things stand. So clearly a little bit of indecision within those markets, so we will refrain from trading those. Let's get up to UK 100, and I'll just put this up on screen. So the reason why I wanted to show you this is just the continuation of this sideways moving, slightly erratic price action, gapping higher, gapping lower, is just not really resolving itself as of yet. Okay, so that is pretty much it as things currently stand. So what we'll do is we'll look at our major markets, and we'll look at US oil. That can sit top right. What I want to see is this lower band just down here. We want to see these prices come and break through these lows with a certain degree of conviction, and we'll look to sell this market below the 67.04 level. Gold, bottom right. We're looking for this market to extend lower. So really we're concentrating on a pullback to the 12.26 level, and we are virtually there as things stand. So could be an opportunity to take very shortly in the gold market. It's important to note the correlation really between the dollar and the gold market. So we're getting some dollar strength, so we're getting some gold weakness as a result. But we look at this price action quite carefully. And the last thing is wanting the pullback to the 73.75 in the Aussie dollar. The dollar CAD we can put top left hand corner. So top left hand corner, we'll have a look at that. And what we're wanting to see is a bit of a pullback to previous levels of support. And this is where our strategy and approach starts to kick in, is that we're not going to be going chasing markets. If we don't quite get the setup the way that we like to trade it, which is based on support and resistance and our understanding of Japanese candlesticks and exhaustion in markets, then we're quite happy to not necessarily be jumping into the markets all the time. So we really want to get the setup as consistent as we possibly can. And in actual fact, that actually allows us to be somewhat consistent in our approach. Now, the one area I'm going to have a look at now is just the gold market. I want to just see this on different time frames. We can see that the stacking up of this price action here. Let's go down to the minute time frame. So we're clearly struggling to break above these highs. So what we can do is we can take a note of this low. We can also take a note of that high. So we're really struggling to close above that level, the 12.25. If we do get a close above it, we're likely to continue higher. However, if we get this rollover price action, it could be a good opportunity to sell this market in and around the 12.24.50 level. So we can keep a close eye on that now. That is the gold market. We still want crude oil to extend lower, but we do have crude oil inventories out of 330, so we need to sort of bear that in mind. So yesterday was the 10 pip loser that we incurred during this session yesterday. And really we were looking to sell this market from these levels, and as you can see, we took a very small, our entry was somewhere around the 74.10, and our stop loss was around the 74.21. So there was 10 or 11 pips risked in that trade, and we got a strong reversal. We failed to break these new highs. We got the consolidation that we were looking for, and then we started getting the structural failures to the downside. So and that's when it presented some good opportunities for this market to sell. And then we just go into this range bound price action again, and then we get the next flush to the downside. So a level that I just want to take note of, just extends itself to the potential for this market to squeeze lower from these levels. So let's go into the smaller time frames. Currently getting a bounce off those levels. Let's go ahead and sell this market. And I appreciate we are getting into this trade now. So it's a nice small entry at 73.59, and we'll place our stop loss just above the high here at the 69 levels. So again, a 10 pip stop loss. And if you move these levels on the screen, you can see that there's a 9.9 pip stop loss in this trade. So we're happy to be selling the Aussie dollar at this level. Now we're likely to see a few more attempts for this market to continue higher. We do have these highs to provide us with a little bit of safety and security, and the more attempts it fails to break higher, the likelihood is we will get a really strong move to the downside. So we're getting into this before Powell starts to speak in the US, and let's see if we get that kind of turnaround move that we're looking for. So we understand the market conditions. The dollar is currently trending to the downside, so we're going in line with the market. We have a directional bias, and now we're looking for the opportunities to actually get into the downside. And we're getting a little break of this level as well, just beneath this low. So I'm going to so let me just check something really quickly. So 0.10. So we're going to take a so we're going to take one mini lot then at these prices, with the expectation for this market to continue lower. And what we're going to use is the high here, the 12.2566, with a 35 pip spread, so 70 pips above that level. We're looking at the 12.26. 35 approximately. So let's change that. So the 12.2635, that's just 2 times the spread, just above that level. So we're looking at the high, and we want it to be 2 times the spread, just in case this market does come back. It's very likely to come back to this level. Now it has conformed so far with our overall view. Yes, of course, this could be the first attempt of a series of structural failures back to the upside, at which point, like yesterday, we will have to be nice and patient and wait for the move to kick in if we do get that opportunity to do that. So that's the gold market. So let's see if we get this next roll to the downside. So we've already seen the price action extend lower. We're not surprised to get this little pullback. So what we want to see is these lows been taken out, and then we can trade this market with a little bit more ease. So getting this pullback to this level is not necessarily a problem, especially if we're seeing this kind of rejection of these levels. That's exactly what we'd want to see. And if we get that rollover back to the downside and continuation of this trend, which is what we're looking to trade, we know what type of traders we are. We know exactly how we're looking to trade these markets as well. We can all look for these opportunities to reveal themselves. So we'll watch this very carefully. We'll take it back to the multi-screen. We're getting a bit of a bounce off this low. So what we want to see with the Aussie dollar is these levels stack up, and you see that's why we're looking for these levels of support and resistance. We're looking for these levels to hold up, and if that's the case, then that adds more momentum to our trade to the downside, and that's what we're looking to see. So we're not overly surprised at the pullback. But let's see if we get exhaustion, if we get a prevention of these prices at these levels, and we get this little rollover to the downside, we would expect a really strong move where all of these buyers will start getting out of this trade if these highs start to stack up. And that's what we're looking to trade. We're wanting to go with the market, which is very clearly to the downside, although I must admit recently it is pulling back, but we're getting the pullback very, very closely to a significant level of resistance in here at the 73.68, and that is the trigger for us to get into this market. And when we do that on a consistent basis, you'll obviously see, the longer you're with us, you'll see the consistency and the reason why we look for these levels of support and resistance based on price action, and a trader's ability also to navigate these markets based on that level. So as you can see, our trading charts are incredibly clear, easy to identify, because we're interested in the open, the close, the high and the low of these candlesticks, and that's what gives us the information that we generally need. So so let's have a look at these. So we want the dollar CAD to continue lower. We're already in the potential for this market to continue to roll over to the downside. We're watching the US oil very carefully, and let's see what's going to happen with the oil market, with the gold market, should I say. Now, the last two markets we were looking at is a really strong pullback, actually, to a clearly defined level of support. The better level is the 16.49. So because of that, I'm going to just create a bit of a double bottom in and around that area there. So we'd like to see further extension back to that level. So let's be nice and calm. Let's wait for that pullback and see if we get prices pulling back to that level, because that is the natural level for us to look to sell this market. And this is why we want to wait for the market to come to us and not necessarily look to get in at these levels, because we want to trade support and resistance. We want to become kind of masters in kind of price action, and for that you need a certain degree of patience, and you need the markets to conform with us as well. So all of these factors are very, very important when trading. So let's see if we get a pullback to this level up here. We've got about 10 pips to move to the upside, and that could give us the ideal opportunity for this market to push higher, to push lower, should I say. So we'll flick back and forth between the CAD, which is extending back to this level. So we're getting close to these levels of support and resistance. Now, we've had a pullback off this low in the Aussie dollar. But we kind of want this level to stack up now. So we'll I'm very interested to see if we do get a confirmed break above the 73.67. That would obviously expose our stop loss. We're only taking a 10 pip stop loss in that market. And again, we've identified this high in here, so we do have our stop loss significantly far away to allow us to remain in this trade, even though we've just marginally breached the high. So we're still in this trade. We've got to pull back off this level, but if we get this rollover to the downside and we break this level, then it adds more reinforcement to the downside. So what we're likely to do is to stick with this trade a little bit longer if we get that move in our favor. So so let's watch these markets carefully then, and we can see that as things currently stand now, this might sort of make a dash lower and then turn around and completely break above it. But what that indicates to us is actually there's going to be continued structural failures potentially to the upside. So unfortunately, the situation behind selling the Aussie dollar in a situation like this on the bottom left hand side is that you may need to take a couple of losing trades in order to actually capitalize on the next move to the downside. And of course the reasons why we say that are based in the fact that markets, they don't move obviously in one direction. Let me get up my pen just briefly. So I'll just bring my pen up here for you now. So obviously markets, they don't move in a linear fashion. You can't sort of get in here so you can sell at that level and you see the markets come flying down and then you take profit at these lower levels. What you're much more likely to see is the market extend lower, maybe where you look to sell it at this level, and what you find is you get a little move, you get the pullback, you get maybe a structural failure, you get the extension lower again, you get sort of obviously all this sort of price action where markets moving sideways, and then you get the flush lower, and then you get pulled back to these previous levels, and then you get the next leg to the downside. So this is very much the pattern that you'll experience. And if we're looking for this market to break above, it of course means that there's a short-term pullback to perhaps previous levels, which is what we'd be identifying, but it doesn't mean that your overall analysis, which is why we have a directional bias to the downside, no longer exists. All it tells us as a trader is that we're going to be experiencing a structural failure to the upside. Now, if you get multiple ones of these, then it means that the trade to the downside no longer exists. So from a theoretical perspective, an uptrend is regarded as something which gives you a series of higher highs and higher lows, whereas a downtrend is regarded as a market which gives you lower lows and lower highs as well on the way down. So as long as it conforms with that, you want to stick with that principle. So just because you suffer a structural failure, it doesn't mean that your analysis is incorrect. It doesn't mean that the trend no longer exists. Now, there is certain circumstances and conditions where that absolutely is the case, where the I suppose the market conditions change to a point where actually a sell trade no longer exists. But so that's important, especially if you're trading pullbacks, which is effectively what we're looking to do. And there you go. There's that. We took a 10 pip loss in that trade. Now we've taken a trade off the back of the 73.67. However, looking at previous price action, this would be by far the higher probability opportunity at the 73.75 level. So if we get a little bit of a pullback to this level and we get similar sort of signals at that level, we would look to actually sell this market again from actually a higher price. So although we've taken a 10 pip loss on the first trade, it's obviously part and parcel of trading these markets. It's obviously about the performance at the end of a week, the end of a month, the end of a quarterly period. So really, the next trade is never of massive importance to us, although we would like to obviously to be profitable in every single trade. But that's not the reality of trading these markets. So attempting to get in based on resistance and looking to see structural failures back to the downside, it is a bit difficult on the back of this kind of price action. So what we'd like to see as a result is this market push back to the 73.75 level. So we're only actually 6 or 7 pips away from that level as things currently stand. So we'll see if we get a structural failure. If these levels start to continue to hold, it might present us with the next opportunity very, very shortly, but we'll have to wait and see. The gold market is still stuck inside this range, which just means that our biasness to the downside still stacks up for us. You know, that hasn't changed. And let's see if we do get a nice move to the downside in the gold market. So dollar CAD, Aussie dollar, we're looking for kind of structural failures as opposed to pullbacks off these highs. And let's have a look at the euro dollar. So the euro dollar is pulling back significantly. So we can wait very, very patiently, and the pound dollar is we'll just put this in the bottom left hand corner. We'll interchange between these dollar pairs. So we are pulling back again, the range that we're interested in, and I'll zoom out. Let's look at it on an hourly time frame. So we've previously identified the 30.50 level as a strong level of resistance, but if we look at more recent price action, you can see that actually between the 30.67 and the 30.50 level, there's only a 17 pip range, but anywhere within there we would be potentially looking to sell this market. So let's go into smaller time frames and let's see what's going on. So we had a nice flush to the downside, followed by a considerable amount of resistance, consolidation, should I say, these clustering of prices between these ranges, and we've had a little bit of a flush back to the upside. So what we can do with this market is actually trade below this low here, if we get that opportunity to do so. So we're firmly at this level of resistance. We've extended up to the 30.56. We've pulled back to the 30.45. We've made another attempt to break above the 30.50 level and failed. So now this market has some decisions to make. Do we break this level, at which case that would be a structural failure to the downside, and you can trade that to the downside, or do we get what's just called continuation to the upside, which would be the key level for this price action to actually continue higher. And how high we're going to move, that's obviously going to be a difficult one, and I'm conscious of the I'm very conscious as well about the fact that the chairman of the Federal Reserve is due to testify in about 9 minutes. So really what we will look to do is to just hold off from taking another trade until we start seeing some volatility come into the market, where we're getting some strong price moves. And we're currently in the gold trade as things currently stand. So we'll just refrain for the next few minutes just to see what happens to price action. We'd still like the euro dollar to push back a little bit. We have the potential for the pound to continue to sell off against the dollar. We'd like the dollar CAD to pull back to the 32.16, so that's why that patience is all important. And we're getting structural failures to the upside again in the Aussie dollar. So so clearly there's a little bit more dollar weakness coming in. That's not necessarily a problem for us, because we're looking for opportunities in markets where we want to see a little bit more dollar weakness. So for example, we want to see the euro dollar pull back to the 16.47. Somewhere in and around this area gives us a fantastic opportunity to sell this market from a higher price, and that's simply our plan of action with that market. Yeah, hi Richard. Great to have you join us. Yeah, no problem at all. Yeah, we will be online pretty much at approximately 2 o'clock every afternoon. So hopefully you can join us when you can make it. What's your take on Powell and the US dollar? Well, I suppose my take is the fact that the financial markets have seemed to have adopted a bit of a positive outlook for the US dollar, Richard. So the reason why that's quite important is, as a result, we're very likely to see some dollar strength, which is actually what we're trading today and what we have been trading all morning, is that dollar strength principle. So if an economy is in good shape, if we're probably beyond full employment in the US now, but it's a very difficult thing to gauge. and the Fed are currently in a program of increasing interest rates, so that's very likely to continue. All of these things are actually quite positive for the US dollar, which is why we've seen the move since yesterday's testimony. So that's just very much likely to continue, Richard. So that's something that that us as traders are actually looking for, and that's why. Okay, we've been stopped out of our Aussie dollar trade. We took a 10 pip speculative trade from a medium, I suppose, probability trade based on the level of support and resistance, but we were happy to sort of take that level of risk in that trade, and we're now getting the pullback across the dollar pairs, and that's all part and parcel really of trading these markets, is experiencing the pullback. So what we're seeing when we look at the gold market is this market continue to move sideways, but we do expect this market to continue lower. We do want crude oil to break below the 67.04 level. So again, we've just got to be quite patient with these markets. We're sort of 4 or 5 minutes away from Powell testifying. We might even put it on just so that you can hear a little bit of the commentary from the testimony. We'll have a look at the Aussie dollar. So we're struggling to break higher, but we just need more clarity, more information. We do want the dollar CAD to pull back a little bit more. So So now we are, so what I'm going to do is I'm going to take a sell trade just in the pound dollar. Okay, so we've just taken a small trade really in the pound dollar. At the 30.44 level, so we want to see this market close below this level. This is a structural failure to the downside. When we look at this chart, what we're doing is we're selling in and around the level of resistance, and we're seeing a structural failure as well. So for all of these reasons, we're quite happy to take an opportunity to sell at this particular price point somewhere in and around here. And of course, paying due attention to risk profile. Make sure you mitigate your risk at all time, and please do obviously always look to trade the financial markets with a stop loss. And we'll keep that risk really constraint. We are risking 13 pips in this trade. I know I said we were going to hold off really from the testimony from Fed Powell, but there's quite a significant amount of pound weakness. So it's the fact that what we want to do when we trade foreign exchange is look for stronger markets like the US dollar and look to trade them against weaker currencies. And today the pound is definitely one of the weaker currencies out there. So that's what foreign exchange trading is all about. It's looking to trade strength versus weakness. And that's really what we're doing. That's why I was quite happy to get into this market and just take this trade as things stand, purely from a technical perspective. Obviously, we understand that the fundamentals behind the British pound are troubling, I'd say, to the UK economy. Not to mention the Brexit negotiations. So we would definitely, from a directional bias perspective, we're definitely looking for the pound to continue to weaken. And all we're identifying is a pullback in the US dollar to actually look to get involved in that trade. So it's the fact that it was the pound dollar gave us that extra little bit of confidence in the trade. So that's really what trading is all about. It's stacking the odds in your favor when you look to navigate, get in and out of these markets. and we use genuine support and resistance when we look to identify opportunities, where we look to enter, where we look to exit, and how we manage that process at every point, with obviously a view of looking to book in profit on a regular basis. Okay, so let's see how we get on with these trades. So once we're in a profitable trade, we may decide to stick with it. We will then look to mitigate risk on the trade as quickly as possible. Look to take this risk off the table, and let's see where this market takes us. So we're quite happy to be in it to the downside. So let's see what sort of move we get. And now it's 3 o'clock, so we'll see if we do have some. So I'm going to keep one eye on the news, just to see if and when we get any news coverage impacting the testimony. So I might share this bit of news event with you just to give you a little bit of background. Yesterday there was opportunities to watch it, but maybe not today. Maybe it's not televised. As always, guys, if you do have any questions about anything we've covered, or any thoughts or suggestions, or any markets that perhaps you're interested in trading, just locate your chat box. Do post it there for us. More than happy to look at other markets if there's opportunities that potentially you're looking at. We can certainly help you and assist you with those. So now we're beginning to get the move that we were anticipating in the gold market. So we're currently in a bit of profit in that, but we do expect to see some strong continuation to the downside. Same situation in the pound dollar. We'd expect this market lower. A little bit of consolidation is just stacking up at these levels. We'd like this market to just push 10 pips higher if we could get it, but we might not get that opportunity. And crude oil is just procrastinating there for a little while. So so let's see how we get on during the session. So we're fundamentally driven, but to contrast between supply and demand, that it was perceived that there's potentially a bit of an oversupply. So as a result, we have seen the price of crude oil drop quite significantly, and I'll show you when all this began to materialize over a week ago. If I zoom in for you at these levels. So in the last sort of 5 or 6 trading days, we're seeing these markets just move up to the upside. This is a top band of a year-long upward trend. really strong consolidation during that period, and then a really strong collapse to the downside. And we're currently at these lows as things stand. Okay, so let's go back to the 15-minute. We do have this little range sitting in here. It's not really doing an awful lot just yet, but that's no major surprise prior to the crude oil inventories coming out in about 25 minutes. So we might see some nice moves at that point. So gold market is extending lower, which is good. And we're currently in a little bit of profit in the pound dollar, but we'd expect, again, you want this market again to just put you at ease. If we get a pullback off this level back to these levels around in here, creating a bit of a pullback off this low, and then if we get this extension extending lower, now this is the commitment of others, and this is the psychology which you'll find in these markets if you can act and behave consistently, is that if you get into this market to the downside and you experience a pullback, that's all good news. Now what you don't want to see is a reversal of that pullback. So we don't want to break these highs and get to these levels and then see a breakout to the upside. That's not what we want to see. But we do want to see the pullback, or the natural pullback, where it actually gathers more pace, where more sellers start coming into this market at around these levels, and then they are the ones that start driving it down to the next level. And that's the psychology of trading these markets. That's kind of the understanding that those that do understand these markets, they can apply these things in quite a consistent manner in their favor, which of course is what trading is all about. So again, with the gold market, we'd be happy to see this market pull back to the 1224 and then show signs of gathering pace to the downside, and that's really what we're looking to see happen. And then we can trade these highs accordingly and start to mitigate profit and risk. Sorry, start to mitigate the risk aspect of the trade. Again, a break beneath these lows would constitute more sellers coming into this market at that point, and that's why you get these sort of pulsating price moves to the upside and to the downside. Okay, so we're currently getting this pullback. We're getting quite close to these levels here in the euro dollar. Dollar CAD really reluctant to pull back to the levels that we would need it to. And we're just... So what this has done now is it's created a bit of a range where, and it'll be interesting to monitor this now for the remainder of the session. So now we understand that chairman of the Federal Reserve is now due to speak. So what I'm quite happy to do is to put this live so that you can hear some of the information yourself. I think it's just about to begin. Let me take you across now then, and you can listen to this.
Which implies another 4 rate hikes on a 12-month basis. I think, honestly, the most important thing for emerging markets is not really looking at the Fed, looking at interest rates in the U.S. It's actually looking at the economic differential between emerging markets and the United States. And so for the first half of the year,
so I do hope you can hear this okay.
It's pulling ahead, growth is very strong, but that's set to wane in our view of the next 12 months, and that should also help emerging market performance.
You talk about Asia. Are you specifically including China, or how do you see China? Is it the emerging market safe haven at this point?
So I think it will include China. It'll include China, Korea, Taiwan, India. It's not a China exclusive story, but it is part of this Asia domestic demand kind of story that's very appealing to us. So it's not the old China, right? It's not the state-owned banks. It's not industrials, but it's this theme of the new China, of the consumer, that other Asian economies are also participating in.
Stocks from Mexico and Brazil, of all places, have been leading things higher over the last months. What does that say about how those countries and investors traders have digested not just the elections, but also these conflicting trade headlines.
Yeah, so for Mexico, I think actually the outlook has gotten a little bit more positive since the election. So López Obrador did win with a large majority, and so did his party in both houses of Congress. But his speech was very pragmatic after the election, right? And so that's inspired a little bit more confidence for investors in Mexico. And also the fact that Mexico has faded a little bit from the trade headlines, has become much more focused on China and the European Union. So that's helped sentiment a little bit with Mexico. And with regards to Brazil, I think perhaps investors had gotten a little bit depressed in terms of the economic impact, and things have started to look a little bit better in the past few weeks.
Gabriela Santos, thank you for joining us.
Thank you so much.
Gabriela Santos, Global Market Strategist at JP Morgan Asset Management. Let's check in now on the Bloomberg First Word News. Here's Kaylee Lines.
Okay.
Bonnie, President Trump is trying to back up his assertion.
Okay. So not an awful lot about the actual testimony of the Federal Reserve Chairman, Powell. So I'm sure we'll start getting the news flow of that event coming through pretty soon. So what we can do is we can trade technically, we can look at price action, we can monitor and gauge what's going on, we can look to trade price action and get in and out of these markets as we need to. So the structural situation with the Aussie dollar, as I was just explaining earlier, is the 73.70 level to the upside and the 73.63 level to the downside. So we can keep a close eye on that. And then just looking at, so we're getting a pullback off this low in the pound dollar. So it's the next attempt lower, which is what is really interesting for us as traders. And the euro dollar is still threatening to push higher, but what this does in the pound dollar, and you'll see our approach to risk management in a second, is that if we get an extension lower, we then bring down and use this stop loss as our next level to mitigate risk on the trade. So let's see if we get that opportunity to manage this trade effectively. Obviously, with the Aussie dollar, we didn't get an opportunity to effectively manage the risk on that trade because we didn't get the initial move that we were looking to trade. We'll see if we get that opportunity again or not. So I'm just very conscious of the time. Like yesterday, we started to see some strength coming into the US dollar pretty quickly. We are seeing the oil market extend lower. So what we're going to do is we'll manage the exposure on the oil trade. So what we'll do is we'll take note of this little high in here, which is the 1224.56. And we'll add 70 pips to the upside of that market. 56. So that's 1225 26, 1225 26. Okay, so let's look at this. So 12.25.26. So that's that trade modified. We've taken off probably 50% of the risk on that trade, so we're quite happy to see this price extend further down. And you can see, if we look on bigger time frames, you can see the pullback to this level of support and resistance, or should I say resistance in this case, followed by the extension of this market lower, and that's really all we're trading. So so we're currently just 2 times the spread above this level in here, and the next step for us now, just before I leave you guys, is if we get a pullback, which is inevitable again, ideally back to this level in here, then and we get the next move to the downside, then we can look to place our stop loss just above this high in here, or wherever that level could be. And that gives us the opportunity to manage trade effectively. We can look to, if we get the market moving in our favor, we can take the risk off the table, and it's a great position to be in terms of a risk-free trade. Fantastic position to be in, because then you can make hopefully consistently profitable trading decisions to the upside then, once you've removed the risk from the trade. So that's what we'll be looking to do, and that's how we look to manage all of our trades effectively. Look to take risk off that table as quickly as we can. So we've removed probably 50% of risk off the trade, with the expectation for this market to continue lower. And we have now broken below, so we're in profit as well in the pound dollar and the gold market. So yes, of course they're correlated, because we're buying effectively dollar strength, we're selling pound weakness, and we're also selling gold. So we want the dollar to go to move to the upside, and we want the gold market to move to the downside. So and now we just need to trade the price action and trade those opportunities. So I'm very conscious of the time, guys, and so what we'll do is we'll wrap it up there. What we can do now, I've said to you, we can do the same thing with the pound dollar. So we'll see this level just sitting in here. Let me go back to that structural level one more time. So we can take note of this high in here, which is the 30.49 level, or let's say the 30.50 level, and so we want 4 pips above that. So the 54 level, 30.54. So the 30.54 level. So that takes off 20-30% of risk on the trade. We do want to see this market continue lower. We're very likely to see these prices squeeze down to the 30.20 level, somewhere down here, and then that represents a 2 or 3 to 1 profit risk reward to the downside, and that's what we're looking for from a take profit perspective. And then to leave you with the oil market, the gold market, should I say. We've had to be patient, but we've traded this price action pretty well so far, and we would look to take probably profit around these lows, around the 12.20, 40 levels. So 12.22, 40 levels, somewhere down here, and then that would give us a good 2 to 1 positive risk reward on the gold market. So we're just looking for those types of trades, and if the opportunity presents itself for us to stay in those trades, then that's what we'll look to do as well. So we're going to continue this trading session over at the Live Trade Room now. So for those of you that are interested in our approach, if you like our style or approach, and you're interested in looking to master something like price action, it's a profoundly useful way to trade these financial markets, irrespective of the fundamentals. Yes, they're very important. They do determine the overall directional bias of any particular market for a whole variety of different reasons. Yes, we do want to embrace the fundamentals and take those on board, but what we're firm believers of is if you trade price action very, very well, and you can become consistent and profitable and competent trading these financial markets, then you end up getting a host of really what we call high probability trading setups, and that's what we encourage all of our traders to be very proactive with. Okay, so if you do like our style and approach, just obviously do subscribe to this channel, do like and share as well, and click on the link below. If you do go to a website, at the moment we're currently offering, we'd offer you 14 days free, completely free access to our whole range of products and services, just so that you can taste it and see what it's about. We offer up to 5 live trade rooms per day, and it's something that you may become very, very interested in. And please do take note of the fee or the cost. Beyond the first 14 days, I think you will find it pleasantly surprising. So do have a look, click on that link, and we'll hopefully see you through the live trade room. So from everyone here at the live trade room, do take care, and we look forward to seeing you all soon. So just before we finish, you can connect with us obviously through the YouTube channel, so just subscribe, click the subscribe button below. Also through Facebook, Instagram, Twitter and LinkedIn, and the details are there currently up on screen. Okay, so all that's left for me to do now is to thank you very much for joining us. If you would like to see us over in the live trade room, just click on the link below this video, and again, you can access a 14-day free trial, and we'll hopefully see you on the inside. So from everyone here, take care and bye for now.